Hello, folks. Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to be talking about the economic data, see how that impacts the overall markets with a little market analysis, and then we'll talk about maybe sprinkling a little geopolitical fodder around that all off, talk about some strategies we could implement into a portfolio based on the assumptions we come up with in these market analysis videos. All right, so real quickly, I want to run over economic data because today is the day we've been talking about all week. It is the flash PMI estimates. This is Purchasing Managers Index. For some of you folks that don't know what the Purchasing Managers Index is or how important it is, it's a very forward-looking data point. And one thing I like to look at are the data points that are forward-looking. I mean, if we look at retail sales, we've kind of all got a pretty good idea. I mean, if you have been outside of your house and gone to a store and stuff like that, you can see how many people are out there, out on the roads, stuff like that. But purchasing managers really get down to the nitty gritty, if you will, because they see the demand coming in for their products. So they are scheduling all the raw materials to come into the manufacturing going forward. So watching their ebbs and flows is really going to give us an indication as to the ebbs and flows of the economy. So if we see these guys really start to pull back on their buying and say, hey, we're going to slow down, then we would start to say, hey, that is that forward-looking metric. Those guys are slowing down. They are a little bit nervous. I should be nervous too. So that said, anything above 50 is expansion in the economy. Anything below 50 is contraction. So we're looking for readings above 50 across the board here. And looks like we've got every number above 50. Starting out across the pond, we got the, before I get on too far, France and Germany are the two major manufacturing sectors of the European region. So those are the ones we're going to key in on. They also get pulled out of the main data points there as well. So the French flash services PMI number coming in at 54.4, pretty close to in line with expectations. Actually, no, miss there, 56.6, and well off of last month's reading of 58. So really seeing these numbers come off across the board, and this is going to be a consistent theme here. We got the manufacturing sector for France coming in at 51, expected to be 53.4, off of the 54 from last month. Germany manufacturing 52, expected to be 54, off of a 55 reading last month. Germany flash services PMI coming in at 52.4, expected to be 54. And again, last month's number was originally 56. So coming off of that number, they revised it down as well. The broader European region coming in at 52. That's outside of France and Germany. Coming in at 52, expected to be close to 54, and well off the 54.5 reading we got last month. And then finally, we got the services PMI coming in at 52.8, expected to be 55.6. That was off of a 56 reading last month. Great Britain coming in with their manufacturing sector in line with expectations at 53.4, and the service sector coming in a little hotter than expected at 53.4, expected to be 53, and they revised last month's number up about 2.5 percentage points there. So while Great Britain's doing very well, it looks like Europe is starting to slow there. Is Great Britain one of the last men to fall on this? I don't know. In this case, I think that we're just seeing a gradual slowdown here across the board in Europe, which isn't really surprising. We've been seeing inflation. We've been seeing some real supply chain issues coming out of Shanghai. That issue is really causing this inflation to explode again, folks. We're starting to see shipping costs go through the roof again. So while we had seen, we're shipping a 40-foot box container, they call it a GP, to ship that back in the day before the pandemic was probably around $2,500 to $5,000 to ship one of those big cargo containers over here. At the pandemic, basically went to $20,000. Then it came off a little bit. We got it to see it as low as $10,000 to ship a container from Shanghai to LA. Now with Shanghai shutting down those shipping prices and everything else, and the price of the goods that actually got here are now being really jacked up. If they got them here, they're putting a massive multiple on them because they know Shanghai's shut down and they're not going to get any more. So, wow. So that being the case, we're going to start seeing maybe some inflationary spikes here, and that is probably worrisome to the PMI guys, especially when they're seeing crude oil jack up. They know that 4th of July is around the corner, and if you think about 4th of July being around the corner, they're talking about airline tickets, and because of the price of crude oil, gasoline, and everything else, that airline tickets are so expensive. They've decided to come up with some interesting ways for you and I to be able to fly again. Well, it's called a layaway, basically, for airline tickets. You can buy them now, start paying them off before your trip happens. Well, 4th of July is right around the corner. I don't know if you're going to have enough time to put that on layaway, but a lot of folks are talking about they're going to stay relatively close, do staycations. You know, let's just think about it. If you go for a 4-hour drive, that 4-hour drive there back while you're there kind of touring around will probably cost you about $300 in gasoline just there. So a lot of folks really pulling back on big trips for 4th of July. Not that most people make a big travel day out of the 4th of July, but we do like to get out and travel during that time, maybe go to the lake or something like that. That's another thing. Folks going to the lake, well, you're going to see who's really rich, and those are the people that actually have a boat this year out on the water. All right. And we also get our flash manufacturing PMI numbers coming out here in about an hour. So we'll have to keep our eyes out for that. I keep my eyes on the Institute for Supply Management, ISM PMI number. That's the one that we kind of look at here. It's a little bit more robust of a number there. But in the United States, we did get jobless claims coming in line with expectations at 229, and the current account balance a little bit lower there. So strength in the dollar not helping out our account balance. All right, let's get on with the overall markets. I've really gotten long in the tooth there because I think it was kind of important in that we needed to talk about some of those things there. Let me find my chart again here so I can actually share my screen. You guys don't have to stare at me anymore. Sorry about that. I probably should have switched that a little bit ago. All right, let's get on with it. Talking about crude oil here, it's making a bit of a move to the upside here. You know, yesterday, the last couple of days, we've been hearing about what are we going to do about getting these prices lower here in crude oil. We've heard about the national holiday lifting of that 18 cents a gallon tax. Well, that's going to help you and I a little bit, but it's really not going to make up for this massive cost that we're paying for crude oil and or gasoline there. We really need it back down into double digits rather than in the 100 handle. And hopefully we can get this to start stepping down here. The only thing that's really going to push this market at or to a level where most Americans would be comfortable is probably to say, hey, we're going to allow some of these permits to open up. We're going to be a little bit more open to fossil fuels, which, you know, we have more fossil fuel here in the United States than anybody else globally. So for us to be saying we're going to just leave it in the ground doesn't make a whole lot of sense to me. So we've got crude oil trying to make a little bit of a move to the upside, but for the most part, we've got overall equities finding a little bit of bounce. Nice big rally towards the end of the day to finish, you know, near where we kind of opened. One thing with that type of candle is it really causes an indecision type of candle, which is a good time to start looking for tops and bottoms in a move. So with that said, I would have said that this is more of a bearish candle, just with the bearish trend that we've been having. We have basically an engulfing pattern on it. So I would be a little bit worried about the upside. You know, we can continue to make these little bounces up to the trend channel. That would be the place where I'd be looking to sell. But right now it's a bit of an indecision day. Keep your eyes out. I would be looking to add covered calls if we get a nice little move to the upside on stocks that we own, selling puts on a sell-off is not really what I'm looking to do right now. I think it's a little bit early for that. I want more of a confirmation to the upside. So right now we need to stay diligent, covered calls, lowering overall cost basis on trades. I feel like I'm kind of a broken record saying that all the time, but right now it's too risky to the downside. I don't think we're going to see massive spikes. Yes. So I don't think we're going to see massive spikes to the downside. There's not that much worry here in the United States that would cause the unknown to really start shifting. And I don't think that we're there yet. I think that we're pretty good idea that it's a crummy economy and that we're all going to struggle to get this economy moving with the fact that we're spending all this money in gasoline. Now, I don't want to be a wet blanket all the time, but I just want to bring back to reality. Remember, we are just now pulling back to pre-pandemic highs. So is the economy as good as it was pre-pandemic? I don't know. That's going to have to be for you and I to decide. I would lean towards it's not as good of an economy as we were seeing pre-pandemic. And then when that happened, it shut off the spigot. I don't know. I just don't feel like we're there yet. So I'm having some struggles here with folks trying to say that, hey, we may have found a bottom here. And I'm like, hey, you know what? It just doesn't feel like we are having the type of economy we had pre-pandemic. So that could be me, but at the end of the day, just be careful at these levels, because I have a feeling, if I'm thinking this as an old salty trader, that there's some institutional guys that are probably thinking the same thing. And it looked like there was no ceiling pre-pandemic there. Again, back to the Dow Jones Industrial Average, it looks like it's a bit of a topping pattern. What has consistently been happening coming into the day sessions, that early morning buying spree, bit of a late day sell-off. And then when the institutional money seems to shut off the spigot, then we get that buying happening from the retail investors that is trying to find a falling knife and trying to catch it right now. So wait for those bottoms. I do like that fact that we did come down and test these levels that we were talking about, broke below 30,000, got that psychological thing going. And we saw that coming down to those key levels in the other equity markets. So have we tested it and rebounded? That's at the back of my mind as well. So I think the risk is still to the downside, folks. But we're going to be keeping an eyes out on these economic data points. They're not looking too great. We've been seeing PMI come off. I am not jumping on board with getting long in the equities right now. Gold futures, really not a whole lot to see here. They haven't gone anywhere in days. Bitcoin is going to be very similar here when we're testing this 20,000. Everybody on TV is talking about the psychological level of this 20,000 and how it needs to hold it. Well, we could break below that, get a little bit of panic going, break down to that 18,250, 18,250-ish area. Kind of get people to panic out, get some of those weak hands out, and then maybe see some buying coming in. That's kind of how I would see that playing out there. But we're going to have to keep our eyes out for it. I'm not going to trade Bitcoin for it, but I know some people that are really seriously considering getting into Bitcoin. They haven't been in it before, never really a believer, but thinking that maybe this is the opportunity to maybe layer in just a little bit of funny money that you don't care about throwing away to that Bitcoin there. And what else are we forgetting to do? Bonds, I don't think are doing anything really. Everybody's kind of a wait and see on the equities. With this bond move though, look to cover calls. Again, same thing. Sell the rips, buy the dips is kind of the idea here. Not necessarily buying the dips just yet, but selling the rips has definitely been working out. And trying to lower overall cost basis in a bond portfolio in a rising interest rate environment is very painful, guys. So make sure that you're staying diligent with that, lowering your overall cost basis. I talk about how to do that in webinars. Check it out for the bond portfolio, lowering your cost in a bond portfolio. Yeah, I know you can't go out and hedge your specific Illinois GMO, but the fact of the matter is we can look at an overall portfolio and start staying diligent with that. So check that out. That's all I got for you guys. Have a great day. Later on this afternoon, we're doing a webinar on the long strangle. We did the straddle last week, so we're going to be doing the strangle this week. I'll talk about the strike locations, everything you need to kind of have to know before you go on trading that strategy. So check it out. Don't forget to hit the like button, smash that that little bell. Don't forget to hit the bell. I took off a sticky note. All right, you can't take that. Take it easy.